And a very warm welcome. You're joining us at Hyde Park on AdaDerana 24. We thought about talking about capital markets, the way forward, Sri Lanka's economic performance and what it really means to be a major player in the international arena. Of course, to discuss all this and especially about the Colombo Stock Exchange and its continuous performance for 35 years. The Colombo Stock Exchange is celebrating its 35th anniversary on the 2nd of December 2020. And we thought about talking about its journey and how far we can go and what sort of an impact we can make globally. I've invited to our studios the chairman of the Colombo Stock Exchange, Mr. Dumith Fernando, who is also the chairman of Asia Securities Group. And he was appointed chairman of the Colombo Stock Exchange on the 1st of July with over 25 years of experience in international capital markets and Sri Lankan markets. I think before you left, you were Group Chief Operating Officer for Credit Suisse Asia Pacific region.
That's correct.
That's before you returned to Sri Lanka.
That's right.
When was it that you returned to Sri Lanka?
I returned in 2013, about 7 years ago.
Right, but 2 decades with JP Morgan and Credit Suisse,
yes,
in New York and
Hong Kong.
Hong
Yes.
Kong.
And in the last bit of which I managed to do quite a bit of work with Sri Lanka as a market. So it was a nice reintroduction back home.
Right, but how has the shift been from international markets to working here in Sri Lanka?
Yeah.
The transformation would have been quite a change.
Yes, it was. But you know, I have to say, in the Asia Pacific job that I had, we had many countries, starting from very large countries like Japan and Australia and China, to very small, you know, emerging market countries, including frontier markets like Pakistan, and to a lesser extent, some involvement in Sri Lanka as well. So I think it was interesting to see that whole gamut of, you know, economies, markets, countries, and learn a lot from that, and trying to see which of those things would fit a country like Sri Lanka and which don't, because that's, I think, very important, not to try to be someone who we are not. But it's been an interesting challenge, and you know, we're trying to make the most of it.
You've been on the board of the CSE since 2017, if I'm not mistaken.
That's right.
And appointed, I said, as chairman in July.
Yes.
I haven't spoken to you since, I don't think so, but I remember talking to you at Hyde Park about what we need to do. And this was during the COVID-19, the first wave, or the first time we had an experience of a countrywide lockdown.
Yes.
And market was shut, and we were all in unison talking about why the Colombo Stock Exchange couldn't continue to operate when globally we see digitalized platforms. But you and your team have made that happen. I remember seeing the press release and being quite elated about it. But what has the performance been amid this second wave or the pandemic ongoing in Sri Lanka?
Yeah. I think it's been a really challenging year, to say the least. When we last met, I think we were struggling through how we can reopen the market.
Right.
And at that stage, the Colombo Stock Exchange, working with the regulator, the Securities and Exchange Commission, had been working hard to see how we can get the market reopened, because, you know, unlike many other countries, we were under a strict curfew, and therefore we were trying to restrict movements of people. And it was quite difficult for us to ensure the operation and settlement of trades at the time, given the infrastructure we had at the moment, at that time. So soon after the lockdowns ended, the Securities and Exchange Commission took the initiative to address this issue, and we created a joint committee on digitalization of the Colombo Stock Exchange. So several commission members from the SEC and several board members from the CSE, along with obviously the staff of both institutions, put in an incredible amount of effort, I must say, to get ourselves to a point where we have digitalized. And this has meant 2 things. One is by ensuring the settlement process for trades is automated. We have the stock exchange, the broker community, as well as customers now being able to operate during a lockdown, because they've got most of their settlement capabilities online, and so we don't have to do that physically. I have to say, during the last couple of weeks, when we had isolation of the Colombo Fort area where the World Trade Center is, which is where the CSE is housed, we had days when we operated the exchange without anyone apart from the security guards in the office. So I think that is a fantastic achievement.
Which is a great achievement, of course.
Yes, and I give full credit, obviously, to the joint CSE and SEC committees that worked on it, but also to our staff, including our IT staff and our operational staff at the Colombo Stock Exchange. I think there's nothing more we can celebrate for our 35th anniversary than that achievement, which has been a groundbreaking transformation.
For 35 years, do you think we've done enough?
I think we had a great start as a stock exchange back in the late 80s and early 90s. In the context of a war-torn environment for most of our 35 years, I think it's been difficult to move beyond some of the initial stages we went to, if you think about how deep the market is today. Having said that, I think we have now got ourselves to a position where we are very, very proactively, working to take this CSE into the next 35 years in a much more comprehensive manner. And we are very blessed to have a regulator and a government that is very supportive of developing capital markets. As you know, for the first time, we have the capital markets portfolio under State Minister, the Honourable Niwad Cabral, who has been very supportive from the get-go here. And so we think that we will do a lot more from now on. But going back to the early start of the exchange started in this format. The CSE was launched in 1985. In 1991, we were one of the very few electronic clearing houses when we created the central depository system. Then in 97, we went on to move all trading to a screen with our automated trading system. And in 98, we introduced debt trading on the market. Now, since then, we've introduced some different boards for equity trading, but we haven't really introduced a lot of new products, partly because some of the exchange infrastructure has had to change. So we're getting that done in the first quarter of next year, in 2021. And after that, we should be able to look at a lot of new product introduction as well.
Right. Something I wanted to ask you is the performance of the Colombo Stock Exchange and economic growth. Have you really understood the link between these? Does it really matter whether the stock market, the capital markets grow, so that that is reflected in the growth of the country, the GDP? We talk about numbers, we talk about market capitalization, we talk about turnover, but do we really understand the linkage here? What does it mean? Honestly, for us, to us laymen, we don't really know what it means.
Yes, I think for the public, a lot of times the stock market is just a place where you can invest in a share and either make money or take some risk, sometimes unfortunately lose money, but it's just a trading venue. It's a lot more than that in the national economic infrastructure. Clearly, the fundamental value proposition of a stock market is a place where companies can come to either raise capital or risk manage through diversifying the risk of ownership of their company's equity or their debt. And that's fundamentally critical so that savings can be channeled to the growth of companies. Without that savings being channeled through platforms like stock exchanges, to companies who are investing to grow and build revenues and generate contribution to the GDP, you will have stunted growth in some of these companies. So we hear a lot of complaints from companies about the limited sources of capital they have, that they are over-reliant on one form of capital like bank debt or a few other things, but that equity capital is really hard to come by. And that's critical. If I'm getting a little technical now, but capital structure in a company has to have a good, solid basis of equity for it to even be able to go and borrow from a bank. So what we provide is essentially a platform as an intermediary of capital from savings to investments that will go into value-generating companies that will then obviously create a contribution to the GDP of the economy. So that's how we see its role, our role in the economy.
One may wonder sometimes due to lack of knowledge, awareness, whether this is more like a betting center, whether this is more to do with daily gains and returns and losses, or I mean, I suppose there is not lack of awareness, but that interest in the capital market. But do you see this growing?
I would address that in two ways. In any market, however developed it is, whether it's a market like the Sri Lankan stock exchange or the largest markets even in the US or China or Japan, there's always elements of speculation in the trading, and that's not a bad thing. It actually creates a bid and an offer for every security, which is how markets work and markets exist. But I think you're right. The primary goal of a market is not that, although a lot of people may know the market for that. So in the interest of developing a much more robust knowledge of this market, we are actually making it a priority to now spend energy and effort and investment in financial literacy. Because the issue you raise is an important one for both us and our regulator, the SEC. We've got a joint committee now working on increasing the public's awareness and better financial literacy, because those types of things will help people understand the actual value of a stock exchange and that it goes beyond just a place to take bets.
Something I wanted to touch on, because I know we've just got 45 minutes, but thought of broad-basing this discussion. Fitch Ratings downgraded Sri Lanka's long-term foreign currency issuer default rating last night, saying increasingly challenging external debt repayment position over the medium term is what this downgrade reflects. But as we speak of this, we spoke about the budget for 2021. We spoke about taxes. The government showed that they wanted to maintain a consistent tax policy there, again in terms of talking about revenue. But we see that we are in a debt trap, and we see that the economic growth has not recovered for quite some time. Yes, Sri Lanka faced a lot of challenges from Easter attacks to 2020. COVID-19 has brought on several severe challenges, not just to Sri Lanka. But what is your view, I'd like to know personally, because of your experience in international markets, of Fitch's continued reaction to what happens in Sri Lanka and how they focus their rating cut?
Yeah. Yes, obviously the rating cut is unfortunate because these rating cuts grab headlines, and I think the Ministry of Finance has expressed its own opinion and dissent with this opinion overnight as well. Now, clearly you raised the right issue. We have a large amount of debt that has to be repaid, but we also have to address the matter of growth. The last 5 years, starting from 2015 down to 2020, is the first period and the only period in the last 50 years where every single year GDP growth has shrunk. So let me explain that again. It's the first 5-year trend of a shrinkage of GDP growth.
In the history of...
In the last 50 years. I've looked at the data for the last 50 years. So there's a big challenge here, which
this doesn't, sorry to interrupt, this doesn't really mean negative growth, but growth has shrunk in the sense from 5.5 to 4.5, and this has been a continued trend, which you see as an alarming trend.
Well, there are, as you pointed out, there are many reasons, right? I mean, there was the Easter attacks, there's COVID this year, we had droughts a few years ago. But the point I was trying to make, rather than actually understand whether, go into commentary about why that happened, is the point that we are here now after a 5-year trend like that. And I think we have to take counter-cyclical measures in terms of policy. And I believe when we started increasing taxes and through some of the restrictions that were brought on in the last few years, at times when there were other challenges to the economy, I think it perhaps in hindsight made things worse. So now I think that not increasing taxes on both corporates and on consumers and individuals was the right approach for a year like a COVID year, which has been a phenomenally disruptive year economically. But that also means, some of the concerns that people like Fitch have need to be addressed going into next year. And the government, I believe, is looking at widening the tax base and looking at broadening the revenues through that rather than through increasing rates. Having said that, I believe we also need to probably look at what other ways in which the government can look at revenue generation. For example, looking at reforms in the state enterprise sector and how some of that can be.
I think that's something quite interesting.
Yeah.
We did speak about this even before you were chairman of the Colombo Stock Exchange. I'd like to touch a little about the budget and the kind of emphasis it has given to the Colombo Stock Exchange. What is the message we're giving to the country here? We've been talking to ministers, senior officials of the central bank about the change or the trend, the kind of focus of the budget from giving out handouts to a more policy directive. But this is not something that somebody could understand too, the direction of the economy, where we are going. But if you understand what the government has spoken about capital market, about listing, about encouraging new listings before the 31st of December, if you can shed some light into what kind of message we are trying to give here.
Yeah, so I think there were a couple of things that came through in the budget. The first one, I think there was a tax deduction you could take for investing in the stock market for 100,000, roughly 100,000 rupees a month. Clearly that should encourage more people to think about investing in the stock market, and I think that's a great thing because that's one incentive that allows more capital to come in from savings into shares. Now, as I mentioned earlier, our role is to be an intermediary of that capital to take that into companies, to finance companies. Now, in a time like this, where companies are complaining about a lack of access to capital, lack of access to debt financing, I think to create the incentives to create more access and more flow of equity capital into them is a good thing, in my opinion. And we as a stock exchange are ready to obviously play our part in intermediating that. Now, at the same time, the incentives provided for companies to go and list, if you registered to list before the end of this year or listed before the end of, actually listed before the end of next year, you get a 50% tax deduction on the first year plus 3 years of tax at 14% corporate tax. Now, that is a good incentive because that should hopefully then push some of these companies to come and list as well, because we want a vibrant capital market. Our market capitalization to GDP is still under 20%. Our aim is to take it to closer to 60%.
Okay.
So we have a lot of work to do, and we're doing a lot of other things as well, but these economic incentives that we've had through the budget will certainly help with that, and we think it's positive.
So does this mean when we say you aim to take it to 60%, you said, which also will be reflected in the GDP growth?
No, so I think what we're trying to say is that as GDP also grows, we want to raise the percentage of the companies valued that are sitting in the stock market. So that will happen through one of 2 or 3 ways. If the valuation of their current companies goes up. Secondly, if new companies get listed for equity. And also if we can list more new types of instruments like REITs, the real estate investment trusts that we have talked about, which will all add to the market cap, and that just is a reflection of how much of our economy and is actually operating through the stock market.
When you say the stock market is revamping its listing process to create and streamline the approval process to a single window approach, what do we have now? What does this mean? Are we saying that the SEC will not be involved, or is it that the CSE will not be involved? Will there be a different process here? What does this mean?
So the reason we've taken up revamping this listing process is because we've had feedback that it is somewhat rigorous and potentially duplicative in some senses. Apart from the economic incentives that we talked about, we want to also make it easier for companies to come and list. So we're cutting through all the bureaucracy that may have existed in the past within the stock exchange. So in terms of the documentation requirements, the information that needs to be provided, we are looking at everything we require now and saying, are some of these redundant? Are some of these not adding value in the process? What we're not trying to do is bring down the standards for listing.
Okay.
What we're trying to do is to say we have an established set of listing rules. We want companies to comply with them. We will be more open to making exceptions if we have alternate ways to measure up those companies. And that we will make sure that companies are given, the single window concept is one where the company is given one customer relationship manager from the stock exchange when they want to list, who will basically help that company navigate through the entire process so that you don't have to go from pillar to post trying to understand where your approval process is stuck. In terms of working with the SEC, at the moment we have a dual approval process where the approval goes through the CSE and then through the SEC. It's something that has been in place over the last 5 years. We had an extremely constructive conversation on this with the SEC chairman and director general last week, and I think we are on the same page. We see eye to eye that we have to try to make this process easier. The CSE is, after all, regulated by the SEC. So we're trying to make that approval process one where both parties' requirements and concerns are very, very adequately met, but at the same time to make it a bit more painless for companies who are looking to list.
What we know and what we've spoken about is that we would like to see the SEC and the CSE working hand in hand as regulator, the SEC and as facilitator of markets.
Yes.
The Colombo Stock Exchange. What is the relationship like? I know I don't want to go into any politics here, but this is something in the media that we've spoken about. Why the regulator, its role, and how the CSE should comply, or how the SEC should look at ways of bringing necessary regulations. But what more do we need to do rather than talking about whether the relationship is fixed or not? Where do we go from here?
Yeah, so look, I mean, I think conceptually there are 2 or 3 things that are important in this process. The first, firstly, we look at regulation, and we also have a regulatory role as the CSE, which comes under the SEC. So we're both playing a slight regulatory role in some senses. But what we're trying to work towards is that regulation, first and foremost, is built around enabling the objectives that we have, but enabling them in a regulated, ethical, and consistent manner, so that we can build as much trust in this market as we can, so that investors and all other stakeholders trust this market as a place where, because of good regulation, they can, safely invest and participate in it. Now, an important point here, which is something the SEC chairman and I once again agree on, is that good regulation doesn't mean more regulations. It just means better regulation. You can have a set of rules, and if you're not, actually enforcing those, that's not good regulation. You can have 100 rules, and if it's not actually enforced, it's pointless. Whereas if you have 10 good rules and enforce them properly, I think it's a better regulated market. So we're trying to simplify it, better regulate it, and be enablers to growth of the capital market rather than try to stunt it. So I think that's the approach we're taking, and I think the SEC particularly, the philosophy of the SEC chairman, current chairman, Mr. Viraj Dayaratne, is that there's no point as a regulator trying to catch people after they've done wrong. So he's very proactive in trying to do what's preventative. In fact, last week we had a meeting with all the stockbrokers as well as the stock exchange to make that point, to make sure that everyone understands the rules and operates within that. So prevention is always better than cure, obviously.
Right. about state-owned enterprises. You did try to talk about revenue, how we can increase revenue. We're also talking about reviving SOEs from economic growth, from revamping the state government enterprises point of view too. But from the capital markets, again, bringing SOEs to the capital market, what does it mean here? Does it mean we will see growth, we will see more engagement? And secondly, what does this do to state enterprises if you list them on the Colombo Stock Exchange? This is something we spoke about again in our previous discussion, but we did not have much time to talk about that. So I'd like to dedicate some time talking about state-owned enterprises, what this means, whether it means privatization. If not privatization, how do we go about this?
Yes. That's a very good question, Indeewari, because it's a topic that brings about much confusion. Listing at its basis is commercializing enterprises a little more.
Right.
Right. Forget the ownership part and all of that. Even if you're listing a company just to raise debt, not equity, just to raise debt, if you want to issue a corporate bond, list a corporate bond or debenture, you still have to go through a process which can be very helpful and constructive for companies, or in the case of state-owned enterprises, for them. There is a governance requirement, there are disclosure requirements, reporting requirements, which all make sure that the companies operate in a disciplined manner within a set of frameworks, and the SEC Act, which has been well thought through to make sure that investors are protected, and that in itself is a win from listing. Outside of that, I think it is an opportunity to unlock value in any company, whether it's a state-owned or private company. I think by listing you can realize that value and also raise capital. So the way I approach this as it relates to state-owned enterprises, as you said, listing is not about privatization. Listing is about helping state-owned enterprises grow faster by raising capital, which the government may not be in a position to provide at the moment because the government has many other priorities. But to raise capital from the public, from savings pools of investors, and use that capital to generate faster growth and therefore faster dividend to its shareholders, which primarily will continue to be the government. So it's a great way for the government actually to start earning better dividends from these companies if they can grow these companies faster, make them more commercial, make them more competitive through the listing process by actually taking capital from the public rather than pumping that in from the treasury. So that's the thesis that we would like to talk about, and we're very open to come up with new ways in which SOEs can list without losing control, and we can talk about that if you wish.
Yes, I want to touch on that because ownership, privatization, these are very sensitive topics in the Sri Lankan context, especially privatization, and who will own these state-owned enterprises once it's listed on the Colombo Stock Exchange. How does this go as a percentage? Do you really give out voting rights? Or do they have ownership to a percentage? Does a private entity or individual have ownership to these SOEs? What's the kind of framework that you're working within?
The primary framework we're looking at is that the government will first have to, obviously come to a conclusion on which of their assets are core and strategic and what are non-core. With non-core assets, the government can obviously decide whether they continue to hold controlling stakes or not.
Right.
So leave that to a side. But for those core assets or core state-owned enterprises, where the government does not want to lose control, we think we have frameworks within which that can happen. Firstly, if you list a minority of the shares, say even a 10% listing to the public, again it helps you achieve the objective of raising capital from the public without tapping into the already stretched treasury. And you don't really give up control. I mean, of course, there will be some transparency and governance requirements, but the government can still very much own, 80 or 90%. So, clearly there is no loss of control.
So the government won't per se be giving out or handing over ownership even
Absolutely not. Absolutely not. I mean, take the largest banks in China, the state-owned enterprises, some of the largest banks in the world are Chinese state-controlled banks. Now, I was involved in my previous, jobs in some of those listing processes. They're listed. They got huge demand from international investors for their shares, but the government still has very much got the control over the boards and the decision making on some of these companies. And it runs well, and they've been extremely profitable. They've generated huge dividends for the state, and it has also generated good returns for employees who, through listing of state-owned enterprises, can generate some incentives through employee share ownership schemes, etc.
Also, has there been any sort of discussion, or is there a positive response from the government to this?
We have not yet had that discussion. We wanted to see and understand the government's strategy on this after the budget, and also we were not about to, presume that we can dictate to anyone what needs to be done.
Maybe create some awareness,
yes.
Knowledge sharing.
So what we have been working, though, in the meantime, is try to put in structures that could be friendly to the government's needs.
And also allow these state-owned enterprises to
list without loss of control. So, for instance, we are looking at the ability to be flexible with our rules around the limits on non-voting share issuance. So that government enterprise could potentially be listed and issue non-voting shares if there's demand for that, in which case...
Sorry to interrupt, but does this mean we will be seeing a set of regulations or a framework or some sort of directive coming in which may set the tone and the framework for SOEs to be listed, so that the government knows exactly how they can, all these enterprises and institutions know how to work with the
I can with much confidence say this: the board of the stock exchange and I are very much supportive of developing or coming up with new regulations or listing rules or frameworks that would accommodate the needs of the state if the state does want to tap into the stock exchange as a form of capital raising.
I don't think we have much time, though, but we're talking about 2021 and 2020. Yes, we've had many challenges, but going forward, what do you aim to achieve? I know we spoke about market capitalization, but as the Colombo Stock Exchange bringing more and more investors, we spoke about retail, but we also did not have time to talk about foreign investments. I think this is really your forte. This is what you've been talking about, increasing foreign investor participation. With the current challenges and with the opportunities ahead, how do we...
I will say, I think, the business I've been personally involved in with my company has actually worked with a majority domestic investors, although we've also worked with foreign investors. So, and in this particular, 6-month period since the lockdown ended, we've actually we've seen markets that have been pretty much driven by the local investors. And I think that is an essential part of what we needed to get going. So we had a real challenge with a very low number of individual or retail investors operating in this market. And one of the biggest impediments to that, to retail investors being active in the market, was the very high interest rates. With high interest rates, I think a lot of individuals are very comfortable putting their money into a deposit and getting a double-digit return rather than taking any risk in the stock market. But as interest rates have come down about 400 basis points since the reopening of the market, what you've seen is a lot of retail money, which is now maybe getting low single-digit returns in a deposit, moving that into the equity market, where dividend yields are about 3%. So you don't need much of a price appreciation to beat your alternative of a deposit.
So this
return.
rate cut is favorable to the
It has been absolutely favorable. Yeah, it has been favorable in three ways, I think. First, as I explained, I think the alternative investments are now generating less. So equities seem to make sense. Secondly, for listed companies who have debt on their balance sheet, their cost of finance has dropped considerably. So as that happens, their earnings go up, and therefore, when earnings go up, share prices go up. So I think, that's one of the reasons local investors have been keen to be in the stock market. And the third reason is we have, a material amount of trading in the stock market done through on margin, which is basically when an investor can borrow against your shareholding up to a maximum of 50%, and then use that to trade. So their cost of borrowing to trade has also gone down because so margin rates have gone down because of interest rate drops, and that has also encouraged them to borrow a little more and trade more actively. So it has certainly helped the stock market.
Going forward, I know we again about foreign investor participation and taking Sri Lankan companies global. That is something we speak in the country. But how can the capital market, how can the stock market play a massive role here? Because overseas, this is what we see. Top global companies, big companies making it big. But here in Sri Lanka, we see something lagging, something pushing them behind. That and I don't want to be asking you too many questions, but what do you expect in terms of government support going forward? I know you're appreciative of what has happened with the budget, but yes, 2021 ahead.
No, I think this issue of Sri Lankan companies going global is a very important matter for the country, obviously, and then we look at our role and say, how do we facilitate that? So we started talking to a lot of companies, particularly exporters, international companies. And we asked them, what are your biggest issues when you try to go international? And they said, it's financing. It's getting foreign currency financing. And for a lot of them, raising money in rupees on the stock exchange doesn't make a lot of sense if they need to then invest that overseas, because the capital controls that are in existence will make it a bit more challenging. So they have been looking at listing in overseas markets or doing, listing private equity in overseas markets to expand their company. So, I think the obvious solution is for us to allow them on our market to raise foreign currency. So we have actually passed a set of rules internally, and we've identified that there are some exchange control regulations that we have to work with. And we've engaged the central bank and the foreign currency department there. And they have done a tremendous amount of work. They've been extremely supportive in trying to facilitate this. I think people all the way up to the governor of the central bank have been paying attention to this matter. We're in the last stages of potentially getting that through. So that's one tangible way we can help as the stock exchange, and we can be relevant and helpful to these companies. So rather than coming to the Colombo Stock Exchange with the option of only raising rupee financing, they could potentially list on a multi-currency board, which we have that board already, but it's only open for foreign companies at the moment. So we're basically trying to allow Sri Lankan companies to list on that, and then hopefully use that capital to go global.
So I think we will hear a lot of good news in the future. Did we touch on the government support that you're looking at? Yeah, so I think generally, in that example, as I said, we were looking for central bank support to be flexible with some of the regulations. So that's just one example. So as and when needed, we will engage. And as I said, I think so far our experience has been that especially new listings in any form that it takes is a big priority for the State Minister of Capital Markets, Minister Cabral, and he has lent his support wherever we have needed it. And we will obviously continue to work very closely with him on pushing that forward. Thank you very much for your time here at Hyde Park. I think we had a very informative discussion, 45 minutes of questions and answers. So thank you very much for your time here. Yes, thank you for having me back again. We had with us Chairman of the Colombo Stock Exchange and Chairman of Asia's Securities Group, Mr. Dumith Fernando, joining us at Hyde Park. Of course, he brings to Sri Lanka a wealth of knowledge, 2 decades of international investment banking experience with JP Morgan and Credit Suisse. So thank you for joining us here at Hyde Park on AdaDerana 24.